Good afternoon, guys. So we are between you and lunch, so I hope our panelists will give you a lot of food for thought today. So before we move on, let us first look at the current landscape of alternate industry in India. So currently, the AUM of PMS and AIF is close to 50 lakh crore. But if we exclude the EPFO part, which is institutional money, the AUM is 20 lakh crore. But a lot of research says that AUM of the alternate industry will go to 100 lakh crore by 2030. In fact, Motilal has one of the research, right? So yeah, in terms of growth, in the last 5 years, alternate industry has grown by 31%, vis-a-vis 24% of mutual fund. So it is growing faster as well, right? To talk more about alternate opportunities in alternates and trends in opportunities, so we have two great gentlemen. So I'll open the fireside chat with both of you. So Akhil, both you and Vaibhav both offer mutual fund as well as PMS. But while mutual fund are most transparent product, they offer product for all life goals, right? Like long-term goals, short-term goals, to generate regular income, to preserve wealth. There is product for all life goals. On the other hand, alternate is little complicated. So why do you think, Akhil, that alternates make more sense than mutual fund if life is easy with mutual funds?
Yep. So we will give food for thought, but not food. So for food, you have to go out. Secondly, I'll slightly disagree with the remark you made that mutual funds are transparent. So even PMS, in fact, PMS and AIF are more transparent because in portfolio management services, the stocks are actually in your demat. You exactly know what the portfolio is, what the charges are, and in fact, you sign the fee schedules
But
also.
in terms of public information, I mean.
Public information also for PMS is available on our website. So transparency part is a myth, I would say. Mutual funds, portfolio management services, alternate investment funds, they are all licenses issued by SEBI. And all the vehicles are positioned in a way to cater to different investor segments. You are right that mutual funds is perhaps one of the most convenient and tax efficient vehicle for a small investor who wants to put a 100 rupee SIP and create wealth to somebody who wants to put a 1,000 crore check. So anybody and everybody can invest. The other beauty about mutual funds is that you have multiple asset classes, so you can participate in fixed income, equity, all of those things. Coming to portfolio management services, there is where the alternate story started about 21, 22 years back. Essentially, it was basically targeted at direct equity investors, those equity investors who probably did not have great experience, or they wanted to be in direct equity but needed professional help. And there is where the discretionary PMS and the non-discretionary PMS took birth. It's positioned for, like I said, it's positioned for savvy investors, want to be in direct equity and need professional help. And this product was actually trying to meet those needs of those investors. On the alternate investment fund side, SEBI came up with this license in 2012. There are three categories. There is a category 1, which is targeted at venture capital funds or early stage funds. You have category 2, which is private equity, real estate, so on and so forth. And then you have category 3, which is listed equities and long short. So typically these are very similar to how the mutual funds are managed. They are, I put it like this, that it's a rich man's mutual fund because your minimum application is 1 crore, right? So it's a pooled vehicle. The units are allotted depending on which vehicle you're coming into. And you have underlying equity portfolio, or you can have underlying real estate portfolio, or a bunch of, basically SEBI is giving a lot more flexibility, freedom to the managers to do the creativity through the PMS in the AIF. And mutual funds is far more regulated because you have a lot of retail investors out there. So, when investors reach a certain stage and they want more differentiation, sophisticated products, differentiated products, there is where they start to incrementally allocate to PMSs and AIFs. And that's what we have seen over the last 10 years. I think the rate of growth for alternates is actually 2 times that of mutual funds, right? So it looks very, very promising.
What's your view, Vaibhav?
Thanks, Nishant and Cafemutual team for inviting, and thanks, Akhil, for opening this. So I'll continue on what you said on food. So I'm a Gujarati, and in Gujarati you don't like plain food. At least I don't. So I believe like roti, sabji is mutual fund, and you need some farsan or some sort of thing to make it exciting, and which is alternates. So for any portfolio, you need to have the right balance. And I would say both mutual funds and alternates can create that right mix for investors' portfolio. All of us know that the advantage of mutual funds is that transparency, cost, tax efficiency are there. But a lot of savvy investors want bespoke solutions. They want to understand from fund managers why you are investing in a certain portfolio, why certain scripts, what is the overall thought on markets. The communication which they require is far more evolved than mutual funds. And alternates gives that flexibility for investors to be more engaged on underlying portfolios, make their own sort of judgment on it, and they can sort of create more informed decisions. Second, after a lot of changes which happened in mutual funds, especially after 2019, with the categorization, the flexibility that mutual funds had to create different solutions has gone down to a large extent, which we can sort of provide through alternate products. So, you have long, short, market neutral, you have different thematic focus strategies which you can create. And I'm sure with the new asset class coming very quickly, that will provide even more sort of options for investors. But I just want to leave an analogy that, all our managers who are there managing our funds have come from the alternate space to the mutual fund space. Right, so they've left the alternate space, come to mutual fund, because mutual fund is still the sort of market where you can manage scale, liquidity easily. And I believe both alternates and mutual funds are there to sort of be prevalent, and both have a great space in investors' portfolios.
Okay, from dal chawal to Greek salad. Okay, so Akhil, my next question is for you. So in the previous session, we spoke about how reform measures like PLI and Make in India, China Plus One will help the public market. But what would be the impact on private market of these reform measures?
Yeah, so if you look at the PLI scheme, which government came with this reform, I think 2 or 3 years back, and they're covering almost 10, 12 sectors, and many sectors, like telecommunications, or let's say the drones, or the electronic contract manufacturing sector. A lot of these sectors, you still don't have too many listed opportunities. So there are many plays which are available on the unlisted side, early stage investing, new ideations, new entrepreneurs. So there is a space, and I think there would be some portfolios, although I have not tracked it, but there would be certain portfolios who would be, like we run a private equity fund, we do look at this space very, very interestingly. We have participated into many such stories, especially from the electronic contract manufacturing space. So yes, there are several opportunities.
And what are some key trends that you're overseeing?
So see, whether listed or unlisted, see, manufacturing has been the key theme or Make in India has been a key theme for this government now, which is now into the third term. And if India has to grow at 12-13% nominal terms, manufacturing has to play a very, very important role, not only to strengthen the economy, but also creating jobs, and a lot of other benefits are there. If you see, increasingly, manufacturing as a theme is becoming a dominant exposure into our portfolios. And thanks to all these reforms like PLI, the China Plus One thing is playing out, all the incentives which have been given, the tax reforms which have been done for the corporate sector. This is pushing the private sector also to now do capex, set up new plants and all of those things. So manufacturing is really a very, very big theme, and government is really very focused to ensure that this part of the manufacturing to GDP needs to push up, and there is a push from the government side.
Okay. So Vaibhav, what is your outlook on private market, and how are you comfortable about the valuation with the respect of private market?
Yeah, so Nishant, you asked a good question. So in 2023, we launched sort of a late stage fund or pre-IPO fund. Took us about a year to raise 100 million. Right? If I had launched the fund now, maybe I'll raise 200 million in a month. Right? So it's all about timing and when do you launch the product. But the advantage we got was in that period, we got a lot of companies to invest at the right valuation. And maybe in a year or year and a half, our portfolio looks up at least 50-70% in this period. So it's a question of fundraise. When do you do a fundraise and when do you do your investments? At this moment, maybe fundraising is much easier. Making investments is difficult. But I would say what has happened is over the last couple of years, a lot of companies are able to access public markets quite easily. And a lot of promoters have understood that they need to raise capital at reasonable valuations, leave something on the table for investors. So I would say though the market is sort of quite hot even now, valuations and promoters' expectations to some extent have moderated. They understand that there has to be something left for investors on the table. And that has sort of helped investors get a much better experience, I would say. And overall, I would say that there are many sectors in the Indian economy which are not represented in the current benchmarks, whether it's large cap, mid or small cap. And a lot of interesting companies will get listed over the next couple of years. And the private equity market looks like exploding over the next 3-5 years.
So Akhil, what are some innovative strategies that are offered by Indian asset managers currently in the alt space?
So it's all about innovation actually in the alt space, right? So let's start with the simple stuff on the category 3 side. So on the category 3 side, you can do long shots right now. It's slightly difficult from regulation perspective to do long shots in a true way on the mutual fund platform. So here you can actually leverage 100% on the portfolio and actually play the real long shot strategy. So that is an innovation. On the listed side, there is a window open for you to create a portfolio with listed as well as unlisted combination, right? So up to 49% of a portfolio can go into the unlisted stock. So you can give a good combination of, 70-80% listed, 20-30% unlisted. So that's again an innovation which typically a mutual fund product will not give you. On the Cat 2 side, now it's very easy to participate in the real estate sector. It could be a good fixed income alternate by getting into real estate funds or private equity, early stage, late stage. So that all these opportunities were not available 10-12 years back. Now investors can actually participate through the institutional way, managed by professional managers across asset classes. Whether you want to buy early stage businesses, young businesses through category 1, or you want to buy late stage growth businesses through category 2, or real estate, or all of these things. So I think this whole AIF space is all about innovation only.
What's your view, Vaibhav?
No, so I echo what Akhil mentioned, that there is a lot of flexibility which is there on the alternate space. And maybe like I touched in my earlier comment that, hopefully with the new asset class coming through, where, now you can have within 10 lakhs as an investor, access to various different strategies that you can manage within the same fund house. So it gives you that flexibility for a lot of retail investors to access alternate products. And, we come from Korea. People have stopped investing in plain vanilla products. They like just 2x, 3x leverage products. So that's the name of the game. And now with, if you see the recent SEBI data, 90% of investors lose money on the F&O segment. And if you want to channelize that sort of money to a very transparent, great way of investing, new asset class and alternates will give you that space that you can provide, leverage products, inverse products. You can provide hedged strategies, unhedged strategies. You can have long, short, market neutral strategies. So I think innovation will start exploding in the next couple of years. All of us are waiting for final sort of regulations to come out for the new asset class. And that can really spur a lot of innovation for mutual fund companies and alternates as well.
So Akhil, you spoke about private equity, private debt. But many wealth managers are yet to explore category 1, category 2 space, venture capital, private equity, private debt. So, and most of the sales happen through in-house distribution network. So what are the opportunities for wealth managers in this space?
No, back home, these products are well distributed across not only in-house, but also largely through private wealth channels and the banks. The category 1, which is the venture capital funds, there is limited distribution because these products are really very complicated, very high risk, right? So still underpenetrated there, but I think the private equity and the Cat 3 AIFs are widely distributed across all channels, at least in India. We have been doing a lot of work in the Middle East market. So for over a decade now, we've been promoting our alternate products in this market as well. So I think it is well distributed across channels, including in-house channels. So I think that's not true.
Okay. So how can wealth managers gain more knowledge about these products? Because these are circulated through private placement.
Get in touch with us. We are sitting here, so talk to us. So we have, I mean, this is one platform. Actually, we are here to actually talk about all these opportunities, and he would have some ideas, we would have some ideas. So these are, yeah, privately placed documents. We have to privately speak, discuss, share opportunities with all the wealth partners. And we are seeing very good, I mean, we recently launched our Gift City Fund, and largely it has been completely raised only in Dubai. So it's just crossed $100 million all from here. So we are doing a lot of stuff for, our friends in the Middle East markets and other markets as well.
So Vaibhav, you touched upon the new asset class. So I'm keen to understand how would it impact AIF and PMS? Because the structure is similar like that.
Yeah, so actually, like I touched on the new asset class, the new asset class provides flexibility for mutual funds to provide a new category which is called as new asset class and provide differentiated products. And the differentiated products could be, like we discussed, market neutral, long short. You could have, various types of inverse leveraged ETFs which can be there. But this flexibility is only for mutual funds and not for PMS AIF managers. Hence, anyone who has a PMS or a mutual fund license can provide these as alternates to invest. And the ticket size is very reasonable. So it allows you to start investing at 10 lakhs. All of you know mutual funds in India start with first investments of 5,000, and SIPs now everyone is sort of offering at 100 rupees SIP. PMS is at 50 lakhs, AIFs are at 1 CR. So this actually bridges the gap between all these three products, gives you alternates at maybe mutual fund sort of transparency, lower ticket size, and flexibility for, I would say, the middle class who cannot get access to alternates at higher ticket size. They can access this through the new asset class.
So what would be some possible strategies that would come through new asset class?
Yeah, like I discussed, there are a lot of strategies you can do. Of course, it's based on regulations, but we would be very excited to launch leverage and inverse products, which the market currently doesn't have. And in Korea, we are experts managing some of those funds there. We would be very happy to launch. Market already has long shorts, market neutral, but and that, of course, we would like to extend those products as well.
So Akhil, you did mention about long and short strategy. So this strategy, investors use it to park short-term money generally. So this category has done in the recent time, it has done pretty well, right? So will it continue to do well? And what are the opportunities in this segment?
It's a it's a good opportunity, although there are size restrictions, because once a fund really crosses 5,000-6,000 crores, there are challenges in terms of the long short opportunities, and there is where the return starts to dip off. But from 0 to 5,000, I think it's a very big opportunity. I think it is not correct to say that it is for short-term parking of funds. This is another set of a strategy, and one can look at this from a 1 year, 3 year, 5 year perspective also. Different managers will have different ways of doing long short. You can have multiple ways, right? You want to outperform Nifty, there could be a differently positioned long short. If you want to be Nifty minus, so the positioning could be different. So there are different ways of doing long short depending on where you want to position and for what risk segment of customer you're trying to look at. You're right, we can position this strategy for a, let's say, fixed income plus also, so where we are targeting a 10-11% kind of a return. So that will depend on how much of your portion of your portfolio is actually going in direct equity, how much in cash, and then how much long short you do in that cash position, right? So it can be positioned differently. It could be for a long-term investor as well. And yeah, I think up to a certain size, it makes a lot of sense.
And what are the, factors that has contributed to the recent performance of long and short fact?
It's very, you need to have the long short opportunities first, right? So enough arbitrage has to be available between these two. And then it is all the manager skills, right?
So there are a lot of strategies in PMS and AIF. How can wealth managers select what is best for their clients? How can they shortlist?
I think wealth managers should interact with the asset managers, try and understand the philosophy, the investment frameworks. Usually the alternate products are theme-based products. You will not find a large cap, mid cap, small cap PMS AIF, right? Typically they will be following certain themes. So understanding the themes, whether you get conviction in those themes, and then how you find the underlying portfolio, the growth potential, valuations. I think all these things put together, you certainly need to do a lot of due diligence, right? Because these are slightly more aggressive products. And in bear markets or correction times, these products can actually go through a larger drawdown. So a thorough understanding on the product, philosophy, positioning, risk, reward, all of these things is very, very necessary, and therefore one should have greater engagement. Mutual funds are like commodity, right? So you really don't need to talk to the mutual funds to understand their portfolios. But for alternates, yes, I think there are many aspects, the operational aspect, the taxation effect, everything has to be understood properly such that the client can understand before he actually goes ahead with the investment.
Okay, so you have a sales background, Akhil. So I wanted to understand, if you were a wealth manager, how would you pitch AIF and PMS product to your wealthy clients?
So my positioning, my pitching, and the way I really do is, so I'm salaried, right? So the monthly salary goes really into the SIPs. So I use the mutual fund route for my SIP investments. And every time I get let's say a bonus at the year end, that's a large pot, and that pot then goes into the alternate products. So largely I have been more on the long only side, but we have recently launched a quant strategy, so I'm really itching to put money over there. So waiting for some money to come. But yeah, I think for simple products, I would go to mutual funds for very, very, very long-term investments for my different goals, retirement and all of those things. But for experiencing, certain differentiated ideas and adding that extra 2-3% to my overall return is where I would like to use the alternate products.
So
by the way, so I've done, like, let's say private equity. This is very, very interesting. Like, I mean, it's not about return. The return could be similar to what you make in equity. It's just the experience. So I've done some private equity also. If you are a fixed income investor, you can go on the private credit side, because on the mutual fund side, the regulations are very tough, right? So credit risk is very, very important on the MF side. But here you can take that slightly higher risk and get that higher return. So I think it's a very differentiated opportunity which is available to improve your overall portfolio color.
Vaibhav, talking about the GIFT City, so it offers convenient way for NRIs and foreign national to invest in India. So what are some opportunities that you would like to highlight that has come through GIFT City?
So Nishant, you point a good point on GIFT City, and we had a session today on opportunities in GIFT City. And like Akhil also said that they've raised sort of good money in their fund in the GIFT City. We are also raising some money in our GIFT City fund. I think it's a huge opportunity, especially in the region that we are. Interestingly, about in our fund, and we are still sort of just 3 months into the fundraise, 20% of the money has come from foreign nationals, and 20% of the money has come from foreign companies. Now that's access that as a distributor and an advisor, you wouldn't be able to provide to them to invest into Indian markets through well-managed India managers. So it helps you broaden your sort of window to go to foreign nationals, companies which are based outside in different jurisdictions, to look at GIFT City. So GIFT City gives you the flexibility of raising money not only from NRIs, foreign nationals, corporates as well. Second is, I think GIFT also gives advantage to a lot of distribution partners here who could access, say, only INR products. You can start looking at dollar offering, and it's a larger market here, which is where you can start looking at GIFT City. There's a misconception that all funds in GIFT City are tax-free. That's not the case. All funds in GIFT are not tax free. So, if you have to go through the underlying strategy to understand the tax implication on the fund. So if your feeder funds with underlyings as mutual funds, like maybe one of the funds we've created, then there is no tax incident in India as a jurisdiction, and because there's no capital gains in this jurisdiction, it becomes tax efficient. If the underlyings are shares, tax incident becomes like any other sort of offshore funds. So investors need to make that informed decision. But for anyone to invest in the GIFT, KYC, documentation, repatriation, remittance, tax filing, all those are far, far simpler. So I would always believe that a large HNI audience who have large corpus are willing to invest decent money, they can shift their mutual fund investments to the GIFT City because it will give them an easy route to invest into Indian markets with a far more flexible investment avenue.
So what are some innovative offerings at the GIFT City?
So the first product we launched was a simple plain vanilla product feeding into some of our strategies which have a proven track record. We've recently filed for an outbound fund which gives access to global markets. So through one of our parent companies, we have beautiful products like artificial intelligence, blockchain, you've got semiconductor. So we're going to create a portfolio which gives access to emerging markets, developed markets, and some of the global themes which you cannot play in India at all. So that's a sort of innovative product we plan to launch in the GIFT City by maybe next month. We're also looking at how we can provide, at the moment Cat3 AIFs are sort of present in the GIFT City. We hope next year sometime all of us will be able to launch retail mutual funds and ETFs also through the GIFT City. So retail mutual funds and ETFs can really enlarge the sort of scope that you can offer through the GIFT City. So we are working towards creating an environment to launch both these sort of products, and using both India and global sort of products that we have. I think there are enough innovative ideas that we can create through the GIFT City.
Okay. So Akhil, one issue with GIFT City is it does not allow money to come from the pool account, right? So is it deterring ability of NRIs and foreign national to invest in India?
No, so pool account as in, what are you saying?
To avoid the round tripping.
Omnibus,
Yeah, omnibus.
So omnibus structure, which is, let's say, in outside jurisdiction can come into the GIFT City. But round tipping, meaning you're talking about the Indians going, using the GIFT City outside and coming back into India, right? So obviously that it doesn't make sense, right? Because just to save the taxation impact, we're going to round tip the money and bring. I think they've changed the regulation. I think up to 25% is allowed or something.
Yeah, but that is only for underlyings.
For the underlying, yeah.
Round tripping is not.
Yeah. So really, this is actually for the external investor. Obviously, not Indians are not. They will not be allowed to come back to India. So just to save the taxation impact, yeah. So I don't have too much of clarity on this. If you have.
Okay.
So, Nishant, actually what round tripping, of course, is not allowed for resident investors to convert INR to dollar and come back to invest in Indian markets. That sort of permission is not there. Only way all of us can do it is maybe if you have a relative here and you can tell them to invest for you. That's a separate way, but otherwise not a sort of legal way to transfer your monies into dollars and come back. But omnibus structure, IFSC as a regulator is not very comfortable because they want to know end investor KYC and documentation. A lot of representation has been done by many AMCs, including us, that global practices are that you don't go and see through each investor KYC. I think the regulator is, regulations in GIFT City are still evolving. We hope that it is sort of streamlined to global standards, and it will allow investments where how global banks can invest on behalf of their investors in one go. The regulator will sort of allow that. But at the moment, they want to go through each KYC of investors, and the onus is there on the AMC to ensure that this KYC is obtained. So that is a challenge which is there in the current regime.
I think the flexibility of getting 100% NRI into the GIFT City is also a very good flexibility which has been given, because if you look at Mauritius structure, if you're a FPI, the limit of NRIs is up to about 49% or so. You cannot go beyond 49%. So that flexibility has been given into the GIFT City. So then ultimately this UBO check and underlying checking how much is the exposure of NRIs or Indian origin and so on and so forth. I think that's one of the real benefits, and which is why GIFT City is doing better than some of the other platforms.
Okay. So one last question to both of you. So if you have 25 crore to invest in alternates, then how will you go about it? How will you allocate, and which product you will choose and why?
So I spoke about myself. So mostly I would be on the long only side with some dash of unlisted exposure, pre-IPO funds or private equity. Not too much of a debt fan, so I will avoid real estate or private credit. Maybe 80% goes into the long only, subject to the idea or subject to theme, and 20% on the unlisted side.
What's your view, Vaibhav?
Yeah, so Nishant, if I had 25 crores after paying 40% tax and 20% investments in my own mutual fund, yeah, right. So if I have that surplus left, I will sort of do a barbell strategy, which is on one side buy sort of market neutral strategies, lower the risk, and 50% of my money I will go on super aggressive, which is maybe focus small cap or a private equity fund. I don't mind. I have 25 crores. I don't mind losing few. So I wouldn't mind that. So I will do a barbell, right? One side, safeguard that.
Swaroop is sitting there. You can ask.
No, I'm going to ask him after this.
25 crore पे डालने का उसको.
So with that, we have come to an end to this interesting session. Thank you so much for your valuable time and inputs, Akhil and Vaibhav, and thank you so much for giving a patient hearing. Thanks.